where I shared on your channel that I lost like 200,000 last year. It was like bottom of the tax, right? The returns is like 43% based on the latest report year to date. As a whole, this entire investment thing is not like I want to buy low, sell high. That's never my intentions. Okay, in the past 5 years, in terms of their computing speed, they went up by 1,000x. So imagine in 10 years, right, the computing speed goes up by 1 million times. The question is, with 1 million times more computing power, what kind of things that you can create?
Dares to put themselves on like through curated content and then they edit and stuff, right? A lot of editing. They sound very professional, very smart and whatnot, right?
Yeah.
I think the real hallmark is when they're down, are they still there? Like, when good times, everybody is a genius.
Or when they are wrong, are they still there?
Yes, correct. So it's the whole process, and you guys are the voters, or in this case, you decide who you want to watch.
Yes.
Welcome back to another episode. I think it's been some time we have gotten guests over to my channel. So I think this time around, I will debut the guest speaker series again. We have Boon here with us on today's episode. So I think I really just wanted to start off the topic because I think it's been quite some time. And the last time we checked in, 2022 hasn't been very good to many of the tech investors.
Yeah.
But I think for 2023 alone, I think you have an incredible performance. So maybe you want to share a little bit about your portfolio now and what you are looking at the markets and how you are maneuvering the markets today.
Thanks for having me. But I think the first things you should do, right, is to link the video the interview we had where I shared on your channel that I lost like 200,000 last year. It was like bottom of the tax, right? Not just tech, the broad market as well. But since early this year, I think from January until now, the market has been kind to us. So I won't say I have recovered all the losses, but it's a great performance this year. But that's the performance of the market. I'm not saying about my own skill. It's not about the skill, it's about the exposure that I have.
Okay, so on a year-to-date basis, do you have a rough number that you can share with the audience?
Yeah. The returns is like 43% based on the latest report year to date.
Okay.
But just for context, if you look at past 1 year, I would say just track S&P 500 along like similar results. And if you look at longer period, you'll be still slightly lower than S&P 500. Just to give you a scale, right? That's because of the underperformance of 2022, and then that one dragged down my performance a lot. But this year is really good year.
I understand. So I think from the previous episode, right, like the last time you were on the channel, we were talking about the breakdown, like the composition and stuff. Then most of it, I know that you are very tech focused, meaning you have most of the FANG stocks, and then on the side you are also actually betting on the semicon positions. So you have TSMC, you have NVIDIA. I'm not too sure whether you have AMD, but I think those two are the main components, right? Tech and semiconductor. And last year hasn't been very well because both are on the down cycle. Not only tech, I think semicon was also plunging down quite a fair bit.
Yes.
So I think just wanted to kind of pivot over, right, to understand your perspective. Back in 2022, have you ever doubted your strategy like, active investing is not for me? Why all the companies that I picked all went down the hill? Then while all your healthcare, your more defensive companies were having a good run, oil, for example. So have you ever doubted, or in terms of your investment journey wise, have you think that I think I'm quite bad as an investor or anything like that?
Actually, doubt wise, I don't think I doubted myself. It's just that sometimes we need to know like our own preference when it comes to investing, right? For me, like you say, I'm very I'm more inclined to buy tech stocks, not just because of the tech. Sometimes it's because like I see one companies that are good at certain area that I see growth in there, and usually these are the companies that is not priced like not the cheap level. Like you don't find PE 10 in these kind of companies that I pick up, for example like Amazon, NVIDIA, TSMC. So, but when I make my investment, I'm aware that the valuation is high, especially if you use some traditional metrics like PE. But I know that these companies, right, they have certain quality that I know from the quality perspective they are good. In terms of their strategy and executions, they have track record. So in terms of their future, I can see that they have like bright future. But that one definitely you need like 3 years, 5 years, 10 years to see the results. It's not going to be like, okay, now it's like cheap, so I buy it. When the PE from 10 move up to 15, then I can profit like 50%. It's not that kind of like short to medium term. It's more like I see the business, this is the business I want to hold for 10 years or more. So I just buy into that. And sometimes we just got like unlucky, right? Say for example, some of the investment, like those like big losses, right? Those are the investment that I made probably in early 2022 or call it like 2021, where the valuation is still high. So if you bought at high valuations and the valuation corrected, which is understandable because all this is related to the macro environment and also
expectations,
yes. And also rate hikes, right? Now interest rate much higher, valuation should come down. Definitely within short period of time, like talking about 1 to 2 years, huge losses, and it will affect the returns that I'm going to get over the next let's say call it 3 to 5 years. But I'm okay with that because I never concentrated in one position and say, oh, I'm all in into this company. I know that this is the best timing to buy, right? It's more like I know these are the good companies, but I might be unlucky when it comes to the timing. That's why my positions or my approach is always to accumulate it over time. Okay. And even with my, like, call it the top positions, I say Microsoft or Amazon's, right? I have like what 10 to 12% or maybe 13% allocations. So let's say if they come down in price, right? To me, how I make myself more comfortable is to tell myself, actually, I'm still buying. Okay. So cheaper, I can buy more. That's right. Yeah, it's not a problem. Okay. So it's still early in the journey, lah. So yes. So I'm like 30 plus years old. I still foresee myself to put money into my portfolio over the next at least 10 to 20 years. Right. So just invest while they are investable, lah.
So when you were discussing the top part, right, you were talking about like the execution, the mindset, how you take a long-term view, right? Yep. Now I want to dive deeper into like your fundamental investing philosophy-wise. Yep. So I'm not too sure whether you guys catch my previous video. So essentially we were talking about the idea of having an investment philosophy. I think there are 3 main criteria. Number 1 is you need to identify where the market is making a mistake. The second one is why they are making a mistake. And the third one, in order for you to profit, they need to correct from the mistake. So maybe from your perspective, because you are not really the quote-unquote, air quotes, traditional value investor where you pay a lot of attention in valuations and stuff. So your idea really is in terms of the quality. So maybe you can walk us through like what drives or how you come up with your own investment philosophy in this case.
Yep. I'll say to approach these questions, right, we can come from a more general kind of view, and then slowly we can get into more the details, the niche. Right. So the general part is that as a whole, this entire investment thing is not like I want to buy low, sell high. That's never my intentions. It's more like I look at my personal call it like balance sheets, right, as a whole. I know that there will be money that I bought into housing. Yes. So there will be allocations for the CPF, allocations for the investment. So all this is part of the holistic asset allocations for my personal balance sheets. Right. So I know that there will be one portions that will be in investment, which we'll call it like stock investment. Of course, there's also some portions into like cash or let's say T-bill, this kind of investment, which is like liquid, safe assets. But for the stock investment, it's very clear that the overall philosophy why invest in stocks is that stocks tend to be undervalued for a long period of time. That is why when you look at historical returns, why is it like it can generate 10%? Say for example, people come up with the expectation of how much earning that will come, right? And everyone say, I'm okay investing in stock market with 3% return, right? Everyone make that kind of assessment, then everyone just bid on the price to a level that on expected, everyone just earn 3%. Then to me, 3% is not enough. But the thing is, stock market is always risky. There are people that are not willing to put money into stock market. So you just put into stock market, there's this what we call the premium. So this premium is discounting back, right? You know that we can reasonably expect to earn quite like 7% to 10% or even 12% during a good years, depending on whether we are lucky or not. So that's where the first things talk about the overall stock market. So I'm comfortable to just put my money with, let's say like a World, MSCI World for a long period of time. I'm okay just to take advantage of this risk, equity risk premium. That's the top part of then slowly going down, right? Of course, you say, okay, then this is the debate about whether I should just DCA, passive investment, or should I do my stock picking? Then this one, my questions to myself is like, okay, do I really have a preference over what companies to choose? Okay. I'm not asking myself like, do I have an edge or not? Okay. So I know that when it comes to edge, right, you need to have put on effort, you need to dig all the data, to study, all this take a lot of effort. I actually don't think that I can outperform the markets. Okay. With my resources that I have, time I have. But I know that I have certain preference. So that my preference is I want to buy into companies with good quality, with good management, even though, let's say because of the overvalued pricing during my investment, I get slightly lower return. To me, it's fine because I'm more comfortable owning something that I understand and I like than just like blindly S&P 500. Right? So my approach is always there's one portion go into ETF, just get the passive exposure. The other part I just look into companies that I like. If I can't find any companies, then so be it. But if I can find companies that I like, for example, companies like talks so much about like NVIDIA, TSMC, Microsoft, Apple. So I'll just put money into it to kind of like, you can treat it like over allocate to these companies. They are anyway in the index. It's just I want to have more exposure because when I just bought like ETF, right? On my interactive broker report, there's a look through. I can see the individual components. In the initial phase, I just invest call it like 30K, 50K, and it's mostly ETF. I look at my Apple allocations, it's like maybe 2,000, 3,000. I was like, come on, it's too low. I want more exposure because I understand the business. I like the business. I want to invest more. So I put more into these companies that I like. So now over time, it's like, I would still consider it's fairly diversified, but you can see that where's my preference now. So I'm not saying the companies that I bought is like, okay, these are the companies that's going to outperform because they're the best.
Okay.
Because the thing is, all these things, good stuff about these companies, they are well covered. Other people also know about it. So do I have an edge or not? I also question myself.
Okay.
But do I like the companies? Yes, I like. So I just put more into it now. So I think I'm fairly comfortable with the allocations that I have. So I can sleep well. Yeah.
So underlying the whole active, so now we are talking about going dive deeper, right?
Yeah.
So asset allocation, then you go into passive versus active.
Yeah.
Then now we go into active investing. What underpins, or like, let's say now you are doing a research on a stock, or somebody says, hey Boon, I think XXX company is very good.
Yeah.
What's the process like for adding the XXX company to your portfolio, or whether you like the company, or do you not do research and say that, okay, I'm only sticking with a set of 8, 10, 20, the current stocks that you have?
Yep.
Can I know the process behind how a company make it into your portfolio?
I'm not full-time onto this kind of things. So I don't have something like, okay, I have a 10-step process so that I can design the process and sell a course on it. I'm not that kind of details, but of course, when I say I have certain preference, there's certain criteria that I'm looking at.
Yes.
And I think I shared it with you before. Like for example, valuation, I still look at them, but relatively speaking, the priority isn't that high. I'm okay to buy a company that looks overvalued, but given that I know why they have certain characteristics that people don't price in.
Right.
Okay. So that's something that my approach. But I can name a few like in terms of what I call the qualities, right?
Yes.
First thing I ask myself is really, what's the business model? Like how do the companies make money? And ask myself, what are the modes? Okay, we can all this is very
Qualitative.
You can say qualitative. You can say these are very like very fluffy.
Fluffy, yes.
What you mean by that, right? That's why you can't really tell all this concept by just naming the theory. You have to go into each companies and ask like, okay, why these companies, why the mode is there? For example, let's name any companies, right? Say for example, we talk about Microsoft. Like Microsoft, you can see that even their products of Microsoft Teams, when competing with Slack
Or Zoom.
or Zoom, right? You can see that they are not the best in terms of the product.
Yes.
But when it comes to grabbing the market share, they are extremely good. So you need to ask like, what are the characteristic or what are the quality of the business that can help them to have this kind of penetration into the market and grab market shares, right? So ultimately, it's all about like their sales team, okay? Their the type of product that they have, right, is very costly for companies not to have their products.
Understand.
So this kind of things is like, okay, I am the user myself. I use Microsoft Excel, for example. Imagine my companies just say, we are stopped paying Microsoft and we have to move to another software that is similar. But just imagine how painful it is for the staff and what is the hit to the productivities, right?
Yes.
You can understand that it's a no-brainer for companies to keep on paying Microsoft for the products that they are subscribing to, right? So this kind of things is like come back to the basic mode, basic needs, like what are the value propositions, then understand the business model and see whether you really like the business model or not. So ultimately still come back to the mode of the business. Yeah.
I think what the other time Dawodaran was also saying, you can say all these qualitative things because it's arguable or debatable, but then it will show up somewhere in the P&L.
Yep.
So in terms of market share percentage-wise, you just compare Teams compared to Zoom, whoever, and then you look at their margins, is it expanding, expenses coming down, whether is there scaling. All these will pop up in a way.
Yep.
The story is just the initial part to get investors excited.
Yep.
But at the end of the day, it still needs to be supported by some sort of value on the balance sheet. So I
Yes.
think that's generally how, especially for companies with track record, it's very easy to track because their ROIC, their percentage margins and stuff, very easy to track.
Yep.
So I think now I wanted to
Let me
pivot.
comment on this first. I think when Damodaran said about this, right, you need to differentiate companies, right? They are, I'll call it like let's break it into two different types of companies. Okay, the first type, right, is the companies that usually I invested. You can name Apple, Microsoft. You can put in TSMC. These companies, right, you look at their growth, right, they are not like growing like 40%.
Yes.
They are growing like what? During good time, maybe 20 plus. During bad time, could be like 5%, single digit kind of returns, the kind of growth. They already achieved the, like what we call the mature state. But you can look at their profit margin, you can see that, okay, they are companies that making money. And they use those money to acquire more business. They use the money, share buyback, pay dividends, all sort of things, right? So you can see that usually when it comes to this group of companies, right, you don't really need to apply what Damodaran said. Basically, you already see the profits. You can almost like just look at the PE, say whether you are comfortable to buy at such PE, at such type of growth. Okay, so just a PE versus growth, and see how are you willing to pay, but knowing that you are not going to get 50% from investing in Microsoft, given that they are already matured, right? So this one aside, this is matured companies. The other part, right, is companies that is still very small, still in the growth stage, still maybe not profitable as of now, and they are moving into profitability. So this one, all these companies usually we call the growth companies, or you can call it like a hype companies, whatever. Like
they rely a lot on stories.
Yes,
like
they rely a lot on story. Yes,
story.
For this company, I will agree that it's not enough to just have the story. You really need to see that, okay, given their growth, given their projected, let's say their expenses and so on, you need to work out the financial to see that, okay, it will make sense, it will become profitable when what happened, when the growth is at what level. Right. So you need to turn the story to the financial and do the DCF to see whether it makes sense or not. Right. So that one I will agree that when he make that statement, I think he's mostly focusing on the second type, not the Apple type.
The funny thing is the Apple type, right? Now, a lot of people are also spinning the story. The time ChatGPT, right, came out, then they were saying Microsoft is going to take Google's market share. And they're going to say, I think there was this number floating around about 10 billion run rate from Microsoft. One of his executives say the AI is a $10 billion run rate business. So then, part of the story again, because AI is a new nascent thing. So then now they're just trying to see whether they can turn the story into real numbers. For even mature companies, because it's the next growth curve, and who say 2 trillion is expensive? If AI is really going to explode, maybe 10 trillion also come. So then there is always this next stage of evolution. So it's just that I do agree I do get what you're saying in terms of the smaller companies, but even mature companies also has numbers. And Apple, looking at how they introduced the app, the whatever goggles thing to fight Meta, we'll see whether they can penetrate the new market again or not.
This one, of course, you can work up the numbers. Like the additional, what we call it, 10 billion run rate or whatever. I think this one is even easier for us to visualize. Say, for example, you just ask yourself, like, what kind of productivity that you can get from all this AI embedded into the products, right? In the past, when we want to do a projection, a financial projection, we need to hire people with experience, know how to model the things, and then need to put into whatever models. It could be Excel, VBA, whatever. But you still need the people to code it. But you know, with the kind of AI, like call it ChatGPT or whatever, when they are infused into the products, right? Basically, the productivity just like at least go up by 2x, 3x, right? Depending on how you use the products, right? So when all these companies, you can name Microsoft or other startups, right? When they can give this kind of like value adds, right? Of course, they are able to charge the customer. You just need to visualize yourself as the customer and ask like whether you are willing to pay this money to increase the productivity. And also stand from the employer perspective. Say now I'm managing a team of 10 people, right? So can I actually bought all this AI tool, push it to my employees and make them even more productive? And you know that for companies, maybe not manufacturing, let's say call it like more software type of business or like business, right? With good tools, the productivity can really increase a lot, right? Because most of our time is really spending using tools to create stuff, right? So I do see that with all these new tools that have AI into it, companies are willing to pay.
I think the bigger issue now is, what's that magic number? How much is the CAGR? What kind of numbers are we talking about? Because every time in a story hype or whatever, a lot of people like to say, the other time 3D modeling also is one very big hype. Metaverse, it completely changes lifestyle and whatever. That was also one very big change. And then now we are talking about AI. It's from the perspective of somebody that doesn't really know what's going on, right? It's very hard to model a number. Some people say 10 billion, some people say 100 billion. Is it too high, too low? How much am I going to expect? I don't know. So then when it becomes I don't know, that's when you see big volatility. Everybody trying to price, oh, can earn or not, cannot earn or not. That's why NVIDIA at the time guidance 11B, more than 7B was the analyst estimate. 11B come up, boom, the share price just went up. So then I wanted to take the chance to jump onto this NVIDIA question.
Okay.
You have been an early investor of NVIDIA, like really early on. And I think throughout the whole roller coaster ride, for those of you who don't actually follow, NVIDIA went up from 100 to 300, then dropped back down to around 100 plus, and then it went up now to 400 plus. This roller coaster happened in, I think, less than 2 years. I think 1 year plus, it went up. So the whole story, from what I remember, correct me if I'm wrong, it went up because of the crypto gaming, whatever. Everybody was saying, oh, this is selling shovels during a gold rush. And then crypto was the crypto harvesting, whatever, was a very lucrative business. And then suddenly the revenue can drop by like 20% year on year. And then everybody said that, oh, NVIDIA company no hope already. Then suddenly this generative AI, whatever AI, computing, data server, whatever chips thing, boom, then it went up to 400 again. So throughout this whole roller coaster, maybe can you explain your thought process or whether your emotional journey, if there is, and why do you continue staying invested even throughout this whole 300, 100, 300, 100 kind of journey?
I never thought about like panic selling NVIDIA. So but I didn't buy as much as I hoped to buy during the crash, because during this like crypto crash, right, it's really, you can see the hit to the businesses, and the hit is like we can't tell like, okay, this is because of crypto and that's it, and crypto is a one-off. It's not like that, because we can see that their revenue drops including like all lines of business, maybe except for the data center where we see that it's quite flat, right?
Flat.
But the gaming business is really dropped a lot. And these companies, right, they are not cheap from the beginning. So they are making money because I think they outsource like all these, like, you know, like chip manufacturing, all these outsourced to TSMC, Samsung. So their margins is good margin business. But when it comes to the profit, right, they are like, you know, making profit but not super high kind of profits, because they are mainly selling GPU just maybe 3 years ago. So then you slowly see that the data center came out, and this is the AI boom. AI boom.
Everybody buying chips lah.
So during that time, I would say I was shocked at first during the drop, because it's really come with the fundamentals in terms of their financial drop. That's why I was saying, okay, given the fundamentals has dropped, even the price dropped a lot, to me it's like, okay, it's reasonable to have this kind of drop when your fundamentals drop so much. So I did accumulate some, but isn't that much during that period. But to me, it's just hold throughout the period. The reason is because when I bought into this company, it's not about like I like the gaming GPU business. It's all about the AI chip.
So you're already betting on the
I'm
AI
already
thing.
betting on this probably since like maybe not that long ago, like maybe early 2020, something like that. I don't recall exactly when.
I mean, you waited for
that was
the whole thing.
before the crypto boom.
After,
before the crypto situations. So back to the AI stuff, right? So the question is like, we need to understand like, why are they so big into this AI? So we always need to come back to the basics that like, okay, now the price as per recording, they are like 430.
Around there.
Let's call it like let's say 3 months later, 6 months later, or 1 year later, they are at 150. It could be, right, the price. It could be at any price, right? So the thing is, if that happened, you need to always come back to the basic fundamental thesis of why I invested into this company. It's all about like what they are introducing into the chip or AI or computing world. And what is different of NVIDIA is that they are very big in terms of what we call the GPU, and they use the GPU not only for gaming purpose, but also for general purpose. So gaming is very niche. Like really the parallel computing that is introduced in gaming, this is really like, initially they use it to project the pixel on the graphic, because you need the parallel computing for this to work. But if you just do whatever that they are doing on gaming, right, they will stay at the gaming business and just selling GPU to the gamers, like high-end GPU and so on. That will be the limit of their business. But I think this is like probably more than 10 years ago, they noticed that actually this parallel computing, of course, during that time is useful for, you know, graphics, parallel computing for graphics, but it's also useful for general purpose. So they created this platform, what they call the CUDA platforms, and their goal is really to use this parallel computing in all sorts of different computing. And when it comes to parallel computing, that's the limit that is almost endless. Like you can speed up things by, you know, it's not in the order of like 2 times every 2 years. It's like really, I think in one of the recent video that Jensen just gave, I think it's during Computex, maybe you can link the video in the descriptions, right? He really mentioned that, okay, in the past 5 years, in terms of their computing speed, they went up by 1000x. So imagine in 10 years, right, the computing speed goes up by 1 million times. The question is, with 1 million times more computing power, what kind of things that you can create? So essentially, it's like, in terms of the application that you can come up with, right, it's really like changing the world. That's where all this ChatGPT come in, because maybe just 5 years ago, maybe even just 3 years ago, there's no way for them to come up with ChatGPT because in order to come up with such applications, you need to process tons of data and you need to process tons of parameters, and all this require a lot of computing, and you really need all this parallel computing. And they have they have these platforms in this what we call the CUDA platforms, with all the library there to really help the companies to do whatever they want to create. So they are like the supplier of libraries. At the same time, they sell all these chips that really tailor-made for parallel computing or CUDA or accelerated computing.
So from what I understand, yes, you can tell that Boon is actually extremely excited and enthusiastic about the future of NVIDIA and how it's going to have an explosion of use. So then back to that question or the hypothetical that you came out now.
Yep.
Within 1 year, let's say NVIDIA really crashes back down to 100, 150, right? It will be a time to accumulate in this case, because you are essentially betting on a future that you envision how NVIDIA is going to play the role.
Yep.
Because then I wanted to point you guys to this tweet. You actually sent the tweet out to his own group. So then it's actually a tweet from Damodaran. So he did say, he did a short tweet thread and he was talking about NVIDIA. So he did say that he actually owns NVIDIA and he's a beneficiary of both NVIDIA and Microsoft. And then I quote, so he was saying, even with the upbeat story that he's created for NVIDIA, he said that with revenues growing tenfold and operating margins approaching 40%, I get a value per share of about $240, well below the current price of $410. So replacing point estimates for revenue, profits, reinvestment and risk, the uncertainty yields a value distribution. $400 per share is possible, but unlikely. So you share the tweet to groups and to people like us. Then what's your own opinion on this tweet? How do you read this situation?
This is why I need to come back to the points that you raised earlier, right? It's like what are the areas that market misprice things?
Yes.
Okay.
Yes.
And for those who are into growth investing, usually the first thing that they will see is that market tend to pricing in the growth rate wrongly.
Correct.
So
the TAM and which translates the growth rate, right? Because if you have a cap, if you have a soft cap, then you can't grow as fast.
Yes, because right now, as of now, even the stuff that we can watch, Jensen presentation, talk about the future, talk about like all these robotics, autonomous driving, all those things. You need to understand, as of now, we are just barely started, you know. Like I haven't seen, like just now we came over here, we didn't take us autonomous driving cars, right? So all this projection, right? Then he said it's going to 10x, revenue is going to 10x, for example, right? He's projecting a time frame that he can see the companies go in terms of their revenue go up by 10x.
10 times.
But you know that for all the big companies today, right? Call it Apple, Microsoft, right? You can see like their revenue, of course, is more than 100x from some time ago. But you can go back to that period and ask people, do you see Microsoft as a company that go at 100x?
Microsoft that time, 100x today, I think it's a different stage where NVIDIA is today, because NVIDIA is already a $1 trillion company. I think when Microsoft was 100 times smaller, it was a mama shop that nobody knows.
Yeah, that's the thing. Now 1 trillion looks like a huge number, right? It's not too long ago, probably let's say quite like 10 or maybe 10 years ago, you look at the companies, all of them like capped at about 200 billions. And you can tell people that actually Apple can go up to 3 trillion. It's almost the feeling of people listening to that. It's almost telling you now
it's
that
ridiculous.
NVIDIA can go up to like
10 trillion.
20 trillion.
Right.
So it's very hard for people to imagine the kind of compoundings that all these companies can have, especially when they are dominated in big areas that is still growing. Because as of now, when you talk about robotics, currently all the robotics, right, is really pre-programmed. You program the reactions of the robots, but with all the AIs and all the new technologies, all these robots, right, they can be reactive to whatever signals that we give to the robots, right? All this is not existent as of now, and all this will be created over the next 5 to 10 years. How big is this market, right? It's very hard to imagine. We can of course say that, okay, 10x, I can imagine 10x, right? But I think when it comes to imagination, I think many people can't really imagine past the 10, 20, 50x. They can't see that. But we know that in terms of our investing horizon, especially you and me, we are not even, okay, I'm not even 40, you are not even 30. So you still have like 30 years ahead, right? Can you imagine how the world will look like after 30 years? And in the futures, I mean, for sure there will be new technologies. It's just that who or which companies are the creations of all this new technology, and how do they dominate the area and grab huge percentage of the profit margin? So that's the things that we need to ask ourselves.
A lot of this sort of growth investing is really on foresight and imagining a world and whether betting on the right companies, specifically if you're actively investing. So I think there's a lot of risks, of course. The longer you drag the timeline, there's more execution risk, more whatever competition, how a lousy rook CEO comes in and then the whole company fails. There are many companies that had this kind of past history. So it's really the point where now it sounds ridiculous, maybe in the future it's not. So you do think that NVIDIA can hit 20 trillion. So today is a buy because it's still a 20x from here, right?
Yeah, this, I would say, I think there's one point that Damodaran also mentioned, right? He said that, okay, we can make all this good story about like, okay, NVIDIA really dominating AI, everything, all profits they tax, right? But it's very rare for a companies can dominate high profit margins, because other companies, right, new start out or whatever, they will try to enter and eat the profit margins. That's always true. That's why when it comes to, in terms of the risk, right, analyzing this company, I will pay a lot more attention to the competitions. For example, like AMD coming up with something, we need to at least like try to assess whether is other companies able to come up with products or chips, right, a data center that's on par with NVIDIA, and come and just like, try to eat their pie, right? So all this is like continuous assessment. We need to see whether they are able to maintain their moat or not. That's the first question. Second question is that now the price, it's not cheap if you look at the PE or whatever.
It's 200 plus
don't
PS
use
now.
PE. We can use whatever assessment that Damodaran did, right? He project the revenue with 10x, and then he project the profit margin will go up, 40%. And then discount back, he say the fair value is 240, right? So you can use his projection, okay, and still come up with a conclusion that this company is not cheap. So if you buy now, it's not to say that, okay, not recommended to buy, or if you have shares of this company, I will not recommend you to sell. To me, I can't come up with any recommendations. To me, it's just like, if someone is buying into this company now at this valuation, you need to be aware that even if the company execute well, it is possible that you still get a low return because of what is being priced in is still a lot. So it's basically like, okay, the market pricing at this level, can they hit above that? Of course. Can it be under? Of course. So where do I judge, right? So this one, everyone just have to do your own research, come up with your own conclusions and act on it. But for myself, I'm comfortable holding, because again, long-term investing is not like to hold 3 years and just look at the investment went up by 150% and just sell and call it a win, right? It's all about like really look at the companies, how they execute over the next 5 to 10 years. I bought it in 2020. If not, I started bought into 2020. Until that, it's only 3 years. At least 7 years more to go, and then reassess again. I think it's fine, right?
Okay. I think the reassessment part, you have been reassessing over the years. It's like a quarterly review or whatever with what. It's not a yearly kind of thing. Then I wanted to bounce onto the other one. So there are two chip companies that you have. One is NVIDIA, one is TSMC, right? So personally, I also have a TSMC exposure. We can talk about it more in maybe another episode. But I just wanted to get your take, because there's an increasing level of tension around people from all walks of life, people that I actually deem pretty smart. Actually, before I hear them talk about China, I think that they are very smart in their own ways, talking about expertise and whatnot. But then whenever it comes to this topic of like invading Taiwan and whatever, right, are you not at all concerned? Because once it invade, I think the enterprise value really might go to zero, because it's a total decimation of value, destruction of value there. If Taiwan becomes a hotspot country and there are basically fightings there. So what's your assessment on this whole Taiwan-China issue?
I'll say, let's take the scenario of really China invading Taiwan, right?
Yes.
I have probably 40,000 into TSMC.
Yes.
You can add the other exposure as well, right?
Apple, all those.
Let's call it like I will have an immediate 200,000 loss hit on my portfolio. But let's say if they really invade, right, I think the entire cost to us, right, in the forms of probably there will be like we want to buy certain items we can't buy because of lack of chip, and hyperinflation will come out because companies can't churn up with products and so on. And the hit to the global economies, which can affect my job, your job, right? All this hit, right? I think that coin 200,000, I would say, is a fraction of the total cost of everyone is going to bear. So to me, if I'm truly afraid of this scenario, right, to me selling TSMC is not enough. I need to sell my entire portfolio and just hold Singapore government bonds, for example.
Okay.
That's the right way to do it if I'm really afraid of this scenario. Okay, that's the scenario. But come back to like asking ourselves, like, will this happen or not? I'm not expert in like geopolitics,
whatever,
but although we all pretend to be experts on shareholder posts, right? But okay, come back to this. My assessment is that China is not going to invade Taiwan.
Okay.
I mean, I judge this from their historical behavior. They are not the countries like US where they just go and invade other countries.
But then here comes the tricky part. I want to do a distinction here. They're not invading other countries. It's one country. They are just taking back what belongs to them, which is why the percentage is a lot higher compared to, let's say they go over to go and desell India or other countries. You get what I mean? So the taking back feels to them is a mission that it needs to be accomplished.
That is a mission, I agree. That one is no joke. It's not like they just give say only. They are serious in the reunifications. That's true. But they don't have past record of invading someone and cause all this like war with other companies. Or we did the country. Have you seen I mean, okay, forget about the pre-1949 okay. After People Republic of China came out. They haven't been like what they call the Civil War. All this that doesn't really happen, right? So they don't have all this track record. I don't think they have the appetite to actually invade. So the only reason that they will invade is really there's some things that trigger them, and this trigger, like let's say call it like Taiwan suddenly say they want to declare independence. All this will really trigger the invasions. And if you ask people from Taiwan, I think there will be people who are supportive of independence. There will be people who are not supportive of independence. All this could be their politics debates, right? But if you ask people, right, do you prefer we do the change now, or do we just stay put status quo, right? I would say probably more than 80% of the people will say let's status quo for now, because nobody is ready to do any sorts of like huge or significant change. So the likely scenario is that whatever that we are experiencing, call it like in the past 3 or 5 years or recent 1 year, right? These things will probably continue to persist, continue to be status quo. Tensions will still be there, but the chips still continue to churn up with chips. NVIDIA continue to like innovate.
TSMC.
So yes, TSMC continue to create chips though. I think this one will continue. I don't foresee that there will be huge changes. But come back to TSMC, the concern is that because on the US side, they also need some insurance, right? They know that the impact, if this thing happen, is going to be big. That's why they have been asking TSMC to create fabs in US. All this will have some other impacts, cost impact and so on. All this need to assess, but as of now, because this entire chip fabrication, building factory in Arizona, all these are still in the progress, right? We still don't know what's the impact, and we don't know if they are able to pass down the cost to the customer, how much they can pass. All this you need to track the financial over time to assess whether it still makes sense or not. It could be that the PE of TSMC is so low because we know that whatever profit that they got in the past few years, right, is like already peaked. Moving forwards, it's like they can't pass on the cost. Their profit margin will be half. This could be one scenario. I won't say this is impossible. So to me, it's like, okay, take it whatever it is. Look at the valuation. If their valuation is already at NVIDIA level, of course I'm not going to hold on to the companies. So it's like looking at the business, looking at the overall landscape, looking at the valuations, and just decide whether it's a company that I want to own or not.
Okay. Then in terms of like this whole moving out of China, are you concerned about it, especially for a lot of all these US companies that have China exposure as well?
You mean setting fab?
No, as in it's just a general movement out of China. Everybody wants to get out of China. That's the narrative now.
I think this one to be, I know there's narrative talking about all these like companies want to pivot away from China, want to build factory in India, all this. I would say definitely this is not like just narrative. This is true. Companies, if given a choice, they want to move out. The difficult part is always how to move out, because whatever that China is able to provide in terms of their labor, in terms of their infrastructure, no other companies are able to provide. They are not even, as of now, I don't think they are even at 1/10 of whatever China scale is able to provide. So it's a logistic problem. If there's another China in India, of course they will diversify already. It just makes sense from business perspective.
Yes.
It's just that it's very hard when you already spend so much money in China building all this infrastructure. It's a collaboration between the business and also the governments, right? All this took time to actually build up. But because of all this geopolitics, people want to diversify. I do see the points of like the business case of it to diversify away, but to allocate significant portions of their manufacturing or their business to get out from China, this is just not feasible within 5 years or even 10 years. So that's the realities. We just need to understand the reality and know that, okay, probably percentage-wise, you will see higher percentage in other countries. But just looking at the China, I don't think it's like a big issue for them. Yeah.
Okay, I understand. Yeah. So I think maybe just to kind of round up the entire discussion, there has been a lot of clarifications and the ideas behind TSMC and NVIDIA. For those of you who want to check out Boon, you can go to his channel. I think just last, maybe concluding thought, do you have any suggestions or anyone that now, wow, it seems like everybody is very excited, very pumped up for the bull market. A lot of people have been showing their year-to-date performance on Twitter, on wherever, right? Wow, they say that they made a killing. Do you have any words of caution or maybe just some suggestions in the whole investing space now?
Yeah, you remind me to share my returns. So I need to share the returns.
Yes.
I think all these things, right? Okay, market tends to be very volatile, and sometimes we are hype. Then last year, just watch the video. The video with 200K red font behind the scenes, right? That just look at the video. Just contrast the mood that we had back then versus now. You see, now it's like become a hero.
Right.
So you can just imagine that all this mood, right, can change very fast over time. But all this doesn't help with your investment. What help with your investment is really those like the grinding part, the part that you ask yourself, just the knowledge part first.
Yes.
Like you ask yourself like, okay, why NVIDIA, right? Because you can just ask around how many people know why these companies is so big into AI. They can understand the details, the mode, right? Can understand in details. All this it's not like read 2 or 3 blog posts, watch 2 videos, then you have the understanding. Because if you don't have the understanding, right, what happens is that just wait for the share price to drop by 30%, then you freak out already. But you need to have the understanding to sit on it. So the knowledge part, right, really take time to accumulate. That's one thing. And then on the other hand, which is the one that you just mentioned, is that you need the grinding part and put in money and just dollar cost averaging. As long as the companies that you pick is going to go up over times, right? Because of the business, the quality of business, they are able to increase the profit and so on. So eventually, give times 3 to 5, 10 years, you will see the results. So that's what we are betting, right? And that's the pot that is going to support our retirements.
Right.
When the time comes.
Right.
Yeah.
No, like you are happy lah. I don't think I'm that happy. I'm still experiencing a drawdown, as in it's still in the red. So it doesn't matter because I think at the end of the day, if you let emotions control if your portfolio is very green and you are very happy and your portfolio is very red and you are very sad, right?
Yeah.
I think there's an issue. An issue in terms of like, why are you thinking this way and what's really driving your understanding of accumulating shares? Because theoretically speaking, if it's a really good company and you are investing properly, you really understand the companies you own. Cheaper means better, right? Like for you to accumulate more because you don't have all the money in the world today and you are constantly earning money. So it means that you can accumulate even more.
Yeah, that's true.
Yeah, so I'm just generally speaking.
Can I ask you, like, have you doubted yourself about your stock investment, stock picking?
I think if I say I don't doubt, that's a lie.
Okay.
I think because we are all emotional creatures. I mean, this can be another episode. I think it's an interesting discussion to go through.
Yeah.
But just to generally give you a very short answer, brief answer. Yes, I did doubt. In fact, I'm still doubting. But the funny thing is, out of my whole portfolio now, only 2 names are in the red. I have around 10 names, but I have a disproportionate allocation to Alibaba and China stocks. But even the China stocks that I picked, other China stocks, right, only Alibaba now is red. Alibaba and KWeb, because of the entry price was too early.
Yes.
But I think the rest of them I've managed to cut some of the bottoms, so they are all in the green. But generally overall, I'm still red because of the over allocation. Then I've been doubting myself that, I don't think I'm that stupid, but then why am I wrong for so long and the recovery or the mean revision hasn't come yet? So it's a question I always ask myself, but I'm still fairly solid. My thesis is still fairly solidified. I'm still giving it some time to play out.
Yeah.
And even if it's wrong, I think it takes time, especially for big companies now.
Yeah.
The mood won't just boom, then the stock price just go missing for a very short period of time. It needs to play out.
Yeah.
So even for Intel, now they're talking about recovery play, right? Even Intel so long already, 5 years, it's down 40%. But
Yeah.
Baba can be down 80% in 2 years. So
Yeah.
I'm just waiting for how things play out and how they are managing their things like their competition, their cost structure and whatever.
Yeah.
So
But I think, right, you cannot feel smart or feel dumb because your position is red or green one. I know that you are still looking at your brokerage account and look at the which one
Yeah,
green,
of
which
course,
are red,
yes.
and then you are forming opinions based on the result.
actually not me, not I form opinions. It's
Yeah.
people form opinions of me. And it
Oh.
gets reflected because social media, right?
Yeah.
It amplifies the impression.
Yeah.
So sometimes I don't even want to look at the stock market, by the way. I have an admission here. Sometimes I just delete the app because I don't even want to look at it.
Yeah.
But people in group chat
remind.
will just, Alibaba is down, whatever, or other companies like Meta that time,
Yeah.
down and down and down. I bought
Yeah.
at 180 plus, went to 80.
Yeah.
Everybody's like, what are you doing? Why are you wasting your time? Blah, blah, blah. So sometimes it's not my fault. It's just the environment amplifies the whole
Yes.
thing. And I just get sucked into the environment.
Yes.
And then I feel very dumb.
But I think that this one is where some form of knowledge when it comes to analyzing, let's say like performance, right?
Right.
Plays some help in this because there are two things, right? One is the stock selection, like why Alibaba, not other companies. This is the stock selection part.
Right.
The other part is always the timing part, right?
Right.
Imagine like there's an alternative chicken that like Alibaba so much, but just found out about Alibaba last July.
Right.
And DCA
In November, December.
and don't know how to do DCA. Somehow he has like 300,000. He just say, I'm going to break 300,000 in 6 months and just invest accordingly. Then he's just going to sit. Basically, he will be buying since like July
December
until
lah.
December
Right.
last year. And then now he's like,
He's
like-
definitely
he's a
green, yeah.
hero
Yeah.
chicken, right?
Yeah.
Then it's the same chicken that like Alibaba. You are the same chicken that like Alibaba. One is showing green, one is showing red. And then you are like, okay, how come one is a dumb one is the smart one?
Yeah.
So so that's what I would say. You have to differentiate away the stock selection versus the timing. Because, but I think your situation is because of the over concentration. It make it harder. Imagine that you are not over concentrating and you just spread across the money over time. Probably you are break even or even in green, right? If you put more money during the
Downturn.
during the downturn, right?
Right.
Yeah.
I think actually no, I think timing is also a skill that you don't know how to read. Because bear markets especially, right?
Yeah.
Those people that really catch. I mean, so give you another example, which is Meta, right? So
Yeah.
Meta have been, we actually had a separate discussion on this
Yeah.
and stuff. Then that time Meta was at 100 plus and then I didn't have the capital to continue averaging down, even
Yeah.
though I wanted to. But then here comes the issue again. Why I'm only up 50% while somebody's up 100%
Yeah.
on a same stock?
Yeah.
It's purely a timing issue.
Yeah.
You get right.
Yeah,
so
yeah.
so then timing is a skill set. You can't say, sure, there's a lot of luck involved, but
Yep.
it's also a skill set
Yep.
to be able to bet when it's, to go in big when it's low.
Yep.
Or
Agree.
low versus lower lah. Like even though it's still considerably low.
Yeah, yeah.
Because suddenly they bounce so high already. You can't argue that time is not low.
Yeah.
Yeah. So I think it's a journey. I'm not saying that I'm the best or whatever, but I just think that in terms of my analysis, stock analysis, I'm still fairly confident that I'm looking at it objectively. I hope that I'm not very
Yes,
subjective.
I understand this, but on the timing part, right, I'll just say one thing, right? Yes, when you are looking at a short period of time, it's called like 3 months, 6 months, 12 months. You can see the timing actually play a big role.
Very
Like
role,
Meta, you bought it at call it like
$80,
150
yeah.
or 120. That's like huge percentage difference, right? You could be earning 10,000 more or less
Yes.
just because of that timing
Correct.
period. But if you just stretch over longer period, like just 10 years versus 1 year, right? Actually, whether you bought it like slightly below or slightly after, it doesn't affect so much. What
That's on the
affect
assumption
returns-
that it's a compounder.
Yes,
If
yes.
it's not a compounder, if
it
only
is-
2x or 3x in 10 years, there's still a big difference.
Yeah, I'm saying that, let's say over 10 periods of time, right? You can't say it's because I'm lucky on the timing
Yes,
or not.
correct.
It's really whether this is the point you enter. You really given time to the companies. Are they able to compound or not? Because over 10 years period, there will be companies that drop 70%. There will be companies that go up 3x, 5x, right? So that one is really like you can't say, oh, because I'm unlucky with my timing. So you see what I mean?
I think the issue more of is because we're on social media, man.
Uh-huh.
Everybody focuses on what the
Short
Fed is
term.
doing, how much percentage you have in the last 1 year, year to date, and stuff like that. So it becomes a manifestation of this kind of opinions and expectations. And like I said, I'm not gonna lie, I think as emotional beings, right, we confirm will spin together, go into the whole narrative and like, oh wow, this is end of the world, or last year was end of the world,
AI
this
now.
year was all in, wow, AI is
All
gonna be
in.
the future. Gonna 10x, 20x, 100x also come. So then it's I think this term was from Ray Dalio. I think it starts with E. I think it's called equanimity. Equanimity, meaning in the highs don't be too high, in the lows don't need to be too low. Maintain a 平常心, a normal state of mind, and go through, execute your plan and see whether 5 years, 10 years back, you still have time to readjust, to I don't know how to put it, reposition how your strategy and your portfolio is. So
that's true. I think to quote on this, I would say sometimes if we talk about like the company analysis that you or me, any one of us that can talk about companies, right? Sometimes I doubt myself whether I'm able to give like really value adds analysis on the companies. So I don't think I can add much value given that I don't produce much content. Usually the stuff that I share, right, including what I just told about NVIDIA, you can just watch the Computex Jason Huang presentation, right? You get all of those, you don't have to listen to me. But what is the value add that Chike or myself we can add, right, is that we really show our track record. When our returns is really like down by big, right, I just show and you can ask my feeling back then. And when the portfolio is up, now we can talk about our feeling, we can share about our journey. And ultimately is to look at how we build our portfolio. It could end up with, let's say, quite like 1 or 2 millions a few years down the road, right? But the 2 millions doesn't come like, oh, suddenly I get a big bonus, then boom, 2 millions out. We really build our portfolio from the first 10,000 up to 20,000, 50,000. It's like step by step and build it across number of years. By the time we hit the numbers, maybe we are already old. I don't know. Hopefully we are still young and can brag about it. But I think that's the things that people can see and see, okay, there are people who can actually allocate money into stock market, earn the risk premium. We can talk about the thesis of all this risk premium, but you can see people execute it over real-time basis. Yeah, because we are still coming up with our videos.
I think the issue more on, if let's say you want to follow people that talk about it, I think everybody that dares to put themselves on like through curated content and then they edit and stuff, right? A lot of editing. They sound very professional, very smart and whatnot, right? I think the real hallmark is when they're down, are they still there? Like, when good times, everybody is a genius.
Or when they are wrong, are they still there?
Yes, correct. So it's the whole process, and you guys are the voters, or in this case, you decide who you want to watch.
Yes.
Everybody's time is limited, and I just hope that we all have a fruitful journey ahead. So I think that's a good roundup.
Alright.
Okay, see you guys in the next video, and of course, don't forget to smash that cute little like button.
Yes.
Goodbye.
Smash the like. Bye-bye.
Bye.